The past few months have seen a big drop in the fortunes of two of India's best known startups. Let's run through some figures. That's the plunge in the valuation of Byju's, once considered the world's most valuable edtech startup. The fall in demand for online learning post-COVID was one of the reasons for the company's downfall. Foreign investors are suing Byju's over missed payments, and there have been raids by India's enforcement agencies. Meanwhile, take a look at this. That's the share price of Paytm. The fintech giant had the biggest share sale in India last year, but investors got spooked after India's central bank recently asked the company's payments bank to halt business due to regulatory concerns. These two companies, once startup darlings, highlight the woes of an ecosystem that's now gasping for breath. Let's rewind a little to 2021. While COVID dealt a brutal blow to the global economy, India's startup industry appeared to be immune. The country minted nearly 50 new tech startups with a valuation of over $1 billion. With interest rates at zero, they raised an eye-popping $42 billion. But then, things quickly began going downhill. So what went wrong?
Companies raising capital at inflated rounds to leading to founders getting into a market share grab with massive burns by postponing their profitability ambitions by maybe a couple of years.
Well, these mistakes have proved costly. Tens of thousands of young Indian techies have lost their jobs. Dozens of startups have shut shop. The sector has seen a bit of a funding freeze, with newbie companies managing to raise barely $7 billion last year. And as interest rates in the US normalize, global geopolitics gets more complex, and corporate governance concerns loom large, it could only get much worse before things begin looking up for India's startups.